Well, right on. Thanks for coming to Decoding with Dregz. Gonna be making sure to be able to show Thor in maybe a little different perspectives. Stuff that I kind of like to hit up, hit up calls and kind of maybe I was gonna say uncontemporary, but a little different than the usual approach to just doing a long and a short when I see those. Oh yeah, look at that, Kira. Keep going up. Yeah, I guess we'll just.
What up, guys?
What's good?
Oh, what up, young?
Just getting rolling. Let's see. So when I sit down, it's always about the ease, and I always say the time saved when sitting down with Thor. It just makes scanning for hours and hours for a good play. Well, I don't have to do that anymore. You know, you can just sit there and pop it up and see those little asterisks and hit it up. Generally, I just go through all of them. I just go and sit and see which ones are close, looking good, or have a certain movement about them that entices me. Obviously, Soul moved up a bunch, so we don't have much going there. You know, you could have your own thesis, but again, ever since Auto Thor came out, I feel like I haven't been interested in trading with Soul as much. Just getting exposure to other things was kind of my cup of tea at the moment, because Thor's acing it. One of the first things I kind of like to do is kind of seeing the direction of the market, and I kind of, you go on side like Twitter or whatever, X, and you could see how people are talking, and that's always cool and fun, but never usually the truth. I like to go to Sol BTC and kind of see Sol's relative strength compared to Bitcoin. Kind of tells me which kind of asset I might want to lean towards, but again, I not really trade in Sol as much as trading Bitcoin into Sol, just out of the notion to get that fatter BTC bag, and while remaining exposed to both assets. It's awesome. Yeah, no, I see right through here that kind of earlier there was a call that bounced out of the kind of the 18 zone through here and went up. That was really cool, but it looks like it probably going to retrace down, so either Bitcoin goes down or Sol goes up relative to that, and it looks like Sol's probably going to catch up almost and go relative to where Bitcoin was going. And there's been a bunch of like replay calls of the shorts, and they've been always like 28, 26, even 30. So they get invalidated because they went low, so then validation point hit and erased it. But when I see those reoccurring calls that come into that kind of range there, which is just easier to see on the chart, I think hopefully the Discord's showing it. My ultra wide screen is, yeah, it should be good. So you can see what is this, like the numbers. Generally, yeah, you got a 23% to 43% relative strength that Sol can do compared to Bitcoin, which I think is really good. And even within that, you have it went away. You have like that, what is that, 16% gap in between that too. So even just jumping up, I mean, obviously for me, that just says I kind of want to be focused on, still kind of focused on leaning towards Sol at the moment, to like kind of dive into that, which I could see I'd probably buy some Sol. So if I'm not, I guess the better way to do it, if I'm sitting on USDC and I'm looking at Sol BTC, if I want to enter one of them and there's no, like, what is that, there's no Sol call, but I kind of want to trade, I'm kind of probably going to watch and set an alarm on whatever kind of app I have on my phone to kind of buzz when that hits that zone. And then whatever price Sol is at the time, I might enter Sol with USDC when Sol compares to that. just so I can get into the trade and start my sequencing going off. And vice versa, if it's, at the top, if it's a short and we were here, I probably wouldn't be buying BTC, I wouldn't be buying Sol with my USDC if it's super high up here. It just tells me that both of these targets are, not bad, but they'll definitely drop like 30 or 20% from whatever that is. But who's to say the price compared to USDC will drop? It just will drop compared to BTC. But if I wanted to get in on that oscillation, it kind of just shows you, like, here is probably a good point I'd probably buy BTC instead if it was there. But that's kind of one way to sit there and look and kind of get the grasp of whether or not Sol has strength compared to BTC or vice versa. It's kind of fun to see that. One, I guess, I've been following lately, and really having a lot of fun with, and it's weird. Sometimes Thor just gets on this quick call sequence, and I'll see a bunch of 15 minutes every like 6 or so hours or 12 and even shorter. But when that happens, it's really, really fun. It's almost like it has some kind of algorithmic or kind of botted, it's hard to say the word, but like botted kind of movement, where it's kind of feels like it's kind of controlled or someone's doing something with that, but
You mean like artificial?
Yeah, like I feel like sometimes other bots are doing some work, and I think sometimes Thor can see right through that. I don't know much of the dev side and under the hood, so I'm always, when I say stuff, it's just going to be an easy way to explain it. But maybe
Hey man, that's not a bad, or untrue way of looking at it. Because shit, let's just be honest. Cyber warfare is real up in trading, bro.
Yeah, no, it's real, and I think sometimes Thor could tell you and get you in on it in time, which I like it. On this left side, yeah. So let's see. The next step, I would say, if I see. All right, I've been following AVAX for a second. It's been 4 or 5 days now of like jumping into these trades and getting in on it. Before, I just left this from a previous call I had done. And if we focus on kind of like when it was over here, Thor was sitting up here, and I think in this zone, like 42s. It has an invalidation, which I kept, which was about like 43 or 48, 43.8, around this zone here.
Frogs fuck.
And when this dropped down, you could see I hit that call. I jumped in it, and I think it was about right in the mid side. So when I did that call, I got 50% of my buy-in on the top line and the bottom. So it averaged at 40.15. But, that's the reality. There's that wick down, right? So if I see how much I could have been down at that trade at maximum, it was could have been 13% for a second, and it popped back up. But if I had a stop loss, it would have triggered, and I would have lost either 2%, 5%, or 10%. So this is where the unconventional side of me comes out and says, if I'm not really leveraged in the trade, and this is all non-financial advice, if I'm not heavily leveraged in a trade, and I'm not using majority of my capital in a single trade, then I trust Thor. I'm pretty confident in how that movement goes, but I'm also pretty confident what I saw too is there's a lot of support zones there that I felt confident that it would catch somewhere. And even though we had a 1-day call on the right, saying, hey, this is something, I know this is a new one, but a couple days before it kept popping up with this 16 or in the teens zone too, which, you want to be aware of that, but it takes a lot to do it, and something really is going to be going on to shake it down that quick. So I'm not too concerned with that quick movement, but kind of what was important too was just before it went down here, I noticed that it passed my invalidations line. So technically this call was invalidated, but I was away to take it off. So it's kind of a bittersweet, but a reality. Like I was at work, I couldn't be attentive to the computer, and it hit the zone, went like 10 or 5% down, 8, and I guess I had to bite the bullet and wait for it. But hey, surely enough, she popped back up, and we were able to make like 7% off the trade. What I do though is sometimes going off the rails from what Thor's actually calling for. So I guess now we'll jump over here. Sometimes I like to put lines. Let's say, was this 45? So this is a call, 15-minute call, AVAX. It's 40.3, cool, or 40.12. That's familiar. It's pretty much right here. So it's fun to leave kind of your lines up sometimes, because sometimes they come back into play, and it kind of reminds me of what happened at that zone, maybe when I took a trade, and kind of seeing what goes on. But anyways, I'll probably get rid of these now that things have changed. But it's funny when you notice how a lot of times these lines act as these invalidation zones act as a resistance for longs, or maybe a support for a short. And so if if the price goes below that, it's broken a support zone, and now this call is washed. But for that, it's 45, so then I'll just jump this up to 45, and I can see that upper limit. And sometimes that upper limit also, I like to do it as a front run the invalidation zone. And then sometimes that could be a nice TP3. It kind of modifies. This is 43.21, which is, all right. It's kind of right there. Let's just get rid of this old one too. But if you entered the trade there and you wanted a TP up at like number 2, I usually average at 2. If I'm leveraged in, I'm probably just going to go for the 1. I mean, I live to fight another day, because, I like to not lose money. It's my favorite part. But once you start drawing, getting these lines, like in that TP2, the tan line, the purple is the invalidation. So if it goes above 45, then I'm more concerned with the short call, maybe on a long term. But seeing this long-term call makes me bullish on AVAX, just because of how the proximity it is to that, and it hasn't really touched the zone. I get a little skittish when it's like a % off and it's kind of done that movement you think it should have done. I kind of, sometimes I fail because I took it out and then it hits the zone perfectly again as a retest or something like that. But it's all right. Sometimes I don't like to be stuck in a trade, especially when fresh Thor calls are coming in. And so back to that 15-minute call, you have your entry at, just sitting down, you got the entry at 40, 40.16. What is that? If you're able to hit that zone, right, that's a 7%. And if it's 42, you get still a 5%. And, that's usually close to 5%. But if the ranges are like that, I'm pretty interested. But my favorite thing, too, is when you start trading, or you start painting those lines, sometimes you see some zones that it's already doing within the chart as it's moving. So it looks like sometimes these TPs are also supports or resistances as well. So it kind of gives me a feeling of what motion we're going towards. And right now, I'm just betting on if it slips, I'll do that. But there's another one hidden down here at 30. What was that? Oh, it's 30, 35, which isn't far. So honestly, what I would probably do there, if it does get to catch that wick, I'd be rocking it. But the reality is, for me, I have to use drift. Drift isn't that high of volume. So the reality is, when I'm entering these, I might enter at a little higher zone, and if I do that higher zone, I might partition out like 50% of my buy there. Like I say, I want to spend $500 on this trade. I'll probably split that like 250 value, 250 value there, and just let it rip. Just a higher one, and then I try to take the lower one just in case. The lower one just makes it so if it does go low, I get a nice average. But I'm also, again, confident that, you don't drop. And if the trade does start failing really bad, that's when I take the little more degen aspect. And that's when if I had used my full capital, I might incorporate a little bit of leverage to catch a bounce there. This is where you start getting a little degen. But if I'm going down, I could try and average out my play to a lower one. So if I can bounce back up to another, what was support but turns resistance, I can then perhaps salvage that or break even, getting out of the trade. It's a weird way to do it because you could just hit your stop loss, but a lot of the trades I've entered and had a stop loss on, I've seen it hit and then it bounces right back out after it. So it's hard to see that and keep on doing it. So I think every trade, depending on my size, I think that's the biggest thing, is how much size you're willing to lose, and how the stop losses come into play. But if I do use a stop loss with leverage, it's probably 2 or 3% once we start getting pretty heavy, because it gets out of control real quick if your plan's going south. And opportunity costs, again, it costs something. I've been stuck in a trade, and maybe this down cycle was going on for like another week. What was that? Let's see going for a week, but I see maybe Jupiter is just skyrocketed, and I could have hit a Thor call on Jupiter when it hit 60 cents, and now it's up 80, now it's up 30%, and I'm still barely making away with my break-even price that hit there. So, and I make nothing, and I do all this work, and I make 1% back, and it's the price to pay for marrying your trade. So that's you got to get lucky sometimes when you're not using the stop loss. But coming back to that 15-minute play, I probably wouldn't do heavy. I'd just enter in probably, if I had 1,000, I loaded up 1,000 in your account, trading account, and then I'd probably use 500 and play with that, and then maybe put another little change at the bottom to catch that, because it looks like when you check out the TPs on both of them, they're both next to each other, so they both want to go near that same zone. So I try to find that's TP2's 42.22, that's 42.65. I might just do both calls hit TP2 at 42.22 if it gets that low. Or what I do on Drift 2 is if wait a second for that. But if it goes too low, we'll just switch it up. Also, when I'm doing that, Thor is, what is it? I like to say on these shorter, in any time frame, it's a snapshot of the moment. And of course, the market's always moving and flowing. So when I entered this trade, it's cool for now. But if you notice like it go above the 45, maybe it's a good idea to pay attention and recalibrate the trade once you've been invalidated. Or check Thor and see if there's another 15-minute call. I feel like when I noticed if this 15-minute call was from a week ago and a new one pops up, so if this one was, that was in February 29th, this one up here is going to be 307, I might take heed to the lower one or the other call, but I'm probably going to believe it, the newer one on the 15. The 1 days don't come up as much, so that theory kind of gets you a little worried when you see the new 1 day call at 16.2, but it has an invalidation zone of 45.23 and a short that's above that. My gamble would be I'm bullish because once we march our way towards this short, it'll invalidate that super low. And maybe it does want to go back down, but I feel like as time goes on, it might move up a bit. And that's just with AVAX. But if I go to another one there, let's see. Like arb is pretty fun too. Arb does that kind of similar movements. I haven't been getting too many lower time frame calls. And sometimes it's fun to see the shorts, but I'm way more interested in those longs. Because if you already have a bag and you're working on it, it's good to see those shorts and maybe trim the bag to buy 10% lower and just build that up. But for me, I get kind of a little bored with doing that sometimes. Let's see, jupe. Let's see if anything. Doge. Oh no, not Doge. Let's get Bonk. Bonk's an interesting one when you look and say meme coins and all that. Better than Gecko, but those 15-minute calls can get pretty wonky. I think it's just that super volatility. I mean, you got calls going up to that 0.04. Damn. Oh, damn. Look at that. Yeah, you get, what is that, 4 zeros and a 6? That would be crazy, but I like it.
Yeah, these meme coins are hella volatile.
Yeah, and putting all your money on saying the bounce there, this just to me is a great spot DCA, because I'm not going to leverage into that. If you dip down there, that's more than 50%, but unlikely. But we've all seen it before on those unlikely calls. Let's see. Yeah, for me, what I did with this one was when it was up near the 4 zone, you could it was getting that toppy vibe. So you trimmed your bag a little bit, and then, if it went up to the moon, it wasn't the first moon bag I fumbled, but it probably won't be the last. But, so I trimmed up my bonk bag there, waited for a Thor call, and before it was kind of populated, you got some at 21s, and I still have one, I think, there at the 21. But I think, if I were to do it, I like to take partials of my bags and deploy them and just sell them at the 15-minute zone and then have a rebuy back ready to go. It's just quick firing and it's scalping, but I like it. And it's my theory is I have a lot more fun doing that than staking. I know staking rewards are fun and all that stuff, but when we have an access to something like Thor, I mean, luckily enough, this doesn't happen every time, but in that last trade, you were able to make 40% more bonk in my bag, and that beats staking. So that's...
Man, I feel like what you're saying is really key there. I never feel like I get ahead when I'm staking. I always feel like I get kind of fucked, right? And you're not liquid, right? So you can be adding to your bag, taking profits, buying in lower, and having liquidity, which is king, instead of being locked up for however long some of these tokens are locked up for staking.
Exactly. And basically, as we all know, it's clear that everyone just wants your money. They want to hold it all. It just makes it easier for them when they have a higher TVL. Just the same thing with the frogs. We want more than 3 million's cool, but there's 5 million, 10 million, and that's when things get incredibly more fun. I'm sure, especially for the team. But a lot of that staking stuff is just ways to, if you weren't a trader and you didn't touch it at all, that's great. But like I said, when you have access to Thor, you don't have to go your whole account in, but you can always stake some and have some bag left to flip and practice with too. It doesn't need to be large amounts. I always traded with, when I started getting into it, I traded with a lot and then I lost a bunch, and then I started trading with a lower amounts, because percentages are the same if you trade in $10, 100, 1,000. I mean, if you made good consistent 5% trades or 2%, you could employ that with your 10K closely enough. But when you start using a higher bag, I noticed, especially in drift, you got some volume that doesn't always hit. So sometimes for me, having a big bag on drift and didn't TP, it doesn't TP, then it goes back down, it really, really sucks. So that's why I try to stagger out my my TPs on drift, especially, just because not everything fills, especially when you're using a bigger bag. Is something I learned. I was like, ooh, yeah, you gotta make sure you spread it out a little bit, or else you will have some trouble. Let's see what else we got. BTC. Yeah, and again, just kind of sticking to the simplicities of Thor. You sat down and let's see, checking out. A nice close one with Bitcoin there. Sit down, you pop up Thor, 6677, whatever. Toss it there, and then I always go and see if it's.
What hey Dregz, what command are you using or right clicking to populate those lines in Trading View?
Trading View? Nice. So, like
yeah, like you're doing right now.
Okay. So damn. So
no, not those.
That's called a horizontal line. So honestly, it kind of damn. No, for that line, it's particularly if you see that little plus sign.
Oh, okay.
And then
just
you
populates
click it,
one?
yeah, and then I click that, and on the bottom it says draw horizontal.
All right, yeah, I never knew that.
Yeah, so that's just a quick way I do it, and then you don't have to do colors. Do whatever colors you want that you remember, of course, but
it saves time drawing out a line and shit.
Yeah, it just saves time and what is that?
A horizontal line anyway.
Yeah, the horizontals. And just get that, and then of course you see where I like the price line. Let's see, the 27.2. Let's see, 27.2. Yeah, that's a 0.6. That's not really fun. that's not really something we. Yeah. So a trade like that, it's cool, but I don't really see it entertaining me too much. But let's see, the 85. The 85. 80. Wants to do. Also, something like. So what I basically like to do too is take like a long call and then a short call if there's one. Then you can kind of see this little range that it might be building, kind of a zone to play with. But sometimes if I don't take a trade, I do like to just leave a call on there, and so I come back to the chart later and see what like Bitcoin's doing. You can see just how it interacted with the line. Sometimes I like just drawing some stuff on the chart, and then it just makes you kind of see it when things play out and how it interacts with the lines, because I get lost with all these numbers real quick. And interesting, I'm just looking at this here, which I just drew that one, which would be the invalidation zone for that long. And in that, you can kind of almost see it's painting a nice little top on that piece there. So it's saying that, so when I sit there and I put that on, the idea then is to go past Thor and what it's given me. So now I see that line, that purple line. I can visually see if it goes up on that line without making a trend line, right? Without zooming out and doing all that crazy fun stuff where, you match it or harmonics and looking at the RSI and all that stuff. I just sit there, paint a couple lines on the chart, and then you sit there and you can see that there's this trend or a range that it's bouncing between. And so right now you can see Thor thinks it's going to come down here, theoretically. If it goes down, go here, bounce up about 1%, and it could go up and down, but I didn't see that. 64, hiding, zooming out. Oh damn! I see these harmonics, man. This gets you crazy. Seeing that changes everything. Not really. Let's see. 764. And then when I see those low calls, I always like to do the lower range one and then the higher range one, and then I kind of make myself a little zone box. If you do pursue the trade, you're able to just right at the beginnings. Yeah, nice. So the idea, what do we draw? trend line or something. So if that goes down here, it could bounce up again, and then supposedly maybe drip down, or it just goes right through here. Oh, these are different times too, huh? It's younger, it's older. So I would say, since there's a newer one at the top, I feel like it would bounce up and then could retrace down to that lower one and then bounce doing its thing. So it could, in seeing that, when you follow that motion, so if it did do this call where, hey, it goes down here, goes up a percent, goes down again, pumps up again to like 660, 6600. I see that as almost like a minor downtrend in that movement. So that's a possible thesis, and like, hey, Bitcoin is probably going to catch a move right down here. It could just pump back up. Or, for me, I always just say, hey, on the side of bearish movement, kind of protects me when I'm just doing my longs, just always thinking more of a worst case. And so when I hit that green line, maybe pop up and then it goes down some more. So maybe I want to buy, if I look where I go off the rails a little bit, would be saying, hey, the likelihood of this going up and getting like under 1% or 1% isn't attractive. But if you could go down a little bit, I'm going to send it down. I'll try to catch that, like front running. I try to front run that bottom call a little bit. And then sometimes that could help when you're doing size or on drift or something. It's just the way it is. But what I like to do is see where it kind of couples a little bit. So you see your range, and without doing a bunch of TA and technical analysis, really, it's just seeing a pattern and drawing a line through it. So I just see this coupling right through here. That shows me a little something, that it likes to either bounce there. It might not be super strong or whatnot, but if we're doing a lower time frame, it's worthy of a try because it's a way better movement than me buying in here. I just feel like I'd rather buy here and there to catch up to 60, which is cool. It should average me there if I do 50-50, which is nice. But that's just one way to approach a call too. It's just using multiple calls to kind of construct a greater kind of little thesis of what's going on. Let's see. What else would I do? Unless you guys have any kind of questions or issues that you run into when you are looking at Thor.
Yes. Seeing how you take advantage of the multiple calls in real time is pretty neat. I mentioned this before elsewhere. Like I typically try to avoid those multiple calls because they make me nervous.
Yeah.
But this is definitely, and again, like not every play, you don't have to marry your trade with every trade. So, risk management and all. So it doesn't have to be a big, trade. So playing with the parameters that you see using those lines, I definitely, it makes me more intrigued to try, seeing it in this light.
Yeah, no, I get confused sometimes. Like the bonk one, that was maybe too many. The weighted was so equal on both sides. That
Yeah.
If you want in on it, of course, using the bottom sides is great to like just set a buy, and if it hits cool. If it doesn't, there's another chance. But yeah, that's not something I'd be leveraging or going heavy on unless I wanted a spot bag or something like that. It's cool to do that, but yeah, still I'm not always excited when I see this equally weighted spread chart. Bunch of boxes everywhere.
Yeah, from top to bottom, like both equally.
that was a good one with the good old bonk there for sure, because that was just like even that 1 hour's. Yeah, that's where you get kind of wonky. But again,
I just want to catch those bonk god candles.
Dude, that's what it's about, because it looks like they're loading too.
I have never been able to do it. Like honestly, the first god candle but was by mistake, and that was a Bitcoin candle that when I very first started trading back in like September, and I was just like, "Yo, what's going on?"
Oh yeah.
But predicting them is just impossible
Yeah.
to me, anyway.
I think that's kind of the point. But I mean, to a degree, because I don't know if everyone's expecting something. There's a lot of human psychology too that goes behind it. Most everyone has the same information that you have, and they're acting upon it. They feel probably similar to you in a way. So I always catch myself, looking at a trade or the sentiment of the market, and you kind of look at yourself and see how you're feeling, and other people are going to feel that way. So then you try to reverse that and say, how would someone take advantage of that feeling? And then that's when I kind of try to go on that play too. It's like, hey, Bonk was up there.
See, I don't go through that second layer.
Oh yeah, that second layer. You gotta like look at yourself, man. But being able to, I don't know, separate yourself and understand that there, it's something goes up, it gets a little top heavy, goes down. I've been pulling up render right here. Because it's a nice case of it just kind of shit just keeps going up. But I think when I went over that, there was a call, which is going to be great to just dive into it from a call that I would actually set up right now to take. So that's a good one to walk through how I would sit down, literally just see this call. Oh, there's two. Okay. So I sit down and you see that, and what I like about looking at that chart was that I know that it's been going up for a while. This was a good support zone just because it hung out here for a bit. It's a 15, so it should be quick. If it was that easy to go up, I mean, it's much easier to go down. Let's see. So what would I do? I would see how much, and then Thor Pro makes it easier for seeing those ranges, but this is so if you went up to 1013 where it's saying it's about like 6 or 7% gain, so that attracts me enough. So let's see, honestly, I could you could paint lines and see that, but the simplicity of Thor, we're gonna just what are we gonna do? We're just gonna take that, let's go to drift. And then say, oh, I like that. So let's see if I had to set this up. Oh. Let's see here. So I like that trade. Like I said from the top, that was pretty cool. So just copy and paste. If I have, let's see, so this account I think is sitting on, just filled it with a 1K in there, so it's a little decent, but not too crazy. I know there's a risk management tool, but we're just gonna go about it this way here. We'll do like a 500. I want to do 500. That's the part that's the most. Oh, I had a bunch of open orders. Oh, let's cancel these. Sorry. Get rid of these guys. Should make the leverage look more okay. In tune with the trade. So if you want to do, I'll just do 30%. And okay, so when I do here posting, that's probably a good little detail people don't see. So you could post a trade for someone else to take, so that it's floating on the order book. You could be floating there in the order book when you post a trade. You usually get a rebate for that, so it's not really costing you money sometimes, or you get a little money back for it. That's cool. But in drift, sometimes you won't be hit because no one's going to take that trade. So that's why sometimes it's good to be a taker and a post. But this is kind of where I will share why I post something and don't post something. I'll post this one because it's in the higher range, so it's a cool. And then
My bad. How would you define posting or what would you
no
define
worries.
posting as?
Oh, just this little guy here. So posting is if I post a trade, you're gonna be stuck up here, kind of in these in the order book, and where someone else can take it. So if they're doing market orders and whatnot, they're able to take that. It's a lot more difficult if no one's taken the orders. So when you're posting, sometimes you might miss out on stuff on fast wick movements if you're posted. But it's a lot cheaper if you do that, because if you use, I'm going to go in like 3,000, I'm going to get 60 cents, rebate. And if you don't post it, you go here to see, they hide the cost usually. So yeah, and then it goes total cost, yeah. So like $3, is the fee. So those little things we look over, but sometimes posting could be really nice, just to save you some cash on some of these trades.
Okay, good luck.
Yeah, it's 300, so I do that and I post it. And so in that regard, I'm posting because if it does wick down, it's the first step that's gonna hit. So I like to do the upper to be part of the trade. So I'll just hit that and go, okay, cool. Thor said 97.70. So limit along there. Oops, shit. I should do it how I actually. I'm gonna cancel that. All right. So what I would actually do is kind of sitting there in that little add TP and stop loss. I always, we don't know if it's gonna hit now, sometime later, but to me, it's already hitting $10. So it might happen sooner than later. But let's see, TP, TP2 is always a confident one, and it's as easy as I just kind of copy and paste it. Something like 5.72%. It's just 17, but hey, it's easy, and I can modify these later, of course, but I like to put my TP at least in there. So if I'm away, if I go to the gym or go do something, it hits and does the range, I can take the profit, and have ace that trade, rather than I've had trades where I've done a limit and it does the whole rotation that I wanted to catch, but I didn't put a TP in there. So sometimes the trade is gone and you have to just bail out of it because the pattern is different. To further knowing that lower one, I'll just probably go take that lower edge off the lower call and then pump it up just a couple 56. So just pump it up a couple cents there. Sometimes adding that little third decimal place in there. It's I don't know if it's in my head, but I feel like a lot of people are gonna be, say you have a zone and everyone's, we're gonna sell it at $9, we're gonna buy at $9. But what if you put a little different to make you a little higher on the buy chart, so the computer picks you up before someone else just because you had a couple decimals above them? That's just trying to front run some things. Sometimes is pretty nice. But was that 9.445? So you do 300 there too. So 30% enter there, 30% enter my account there, and then leave that other 30% if I am committing that 1,000 to this trade, saying, hey, I'm going to use that account to do this render trade. And if it goes down a little bit, that's when I'll deploy maybe some more capital lower. But that's that's just another thing. Let's see. I won't post this one. And the idea of if it does wick down, let's see if it does. Come on, trend line. If it does just wick down real quick and just bounce down and come back up, it's usually, again, like I said, maybe pretty quick. So I want to take a trade if it's posted at that zone, because I'll be able to snatch it up easier. So sometimes I post some and I need to add a TP there. And again, I just like doing
strictly circumstantial.
Yeah, it is. It's so circumstantial. But if you hit TP2 there, that's pretty great for like a 7.89%. And that's cool if it does hit it. Let's do that, and 94. Yeah. Nice sitting there like that, but you can't ignore that it did rocket up from around this area. So this is banking a lot of strength is up here. I have to be mentally ready for it to go down there. So I probably, in that event, just monitor it, and if it goes out of whack, if we drop like that and really quickly, that wouldn't be, I mean, such a surprise either. Sometimes that happens. But if I'm able to be by my computer, and I know I'm by my PC a lot, that's when the stop loss isn't used by me very much. When I'm not leveraged like that, I only have, was it like 60% of the capital in there. So I still have some assets to get a lower range if it does bounce to that 88. Let's just go here. If it does bounce from like the 88 or 8.8 zone, or around through here, it could dip down, or like I said, go down there. It's usually again case by case. I'm pretty bullish on that too. So even if it did fall, I guess I would kind of marry it for a little bit until I can get out of that trade. But it's not, again, all of my capital. If that was everything I had, this is all I had to trade with, obviously I wouldn't be using all of that. But, you know, hey, I usually have a single account in Drift or other sub wallets. But let's see. I usually try to stick to one asset being traded with the capital in that wallet. It's easier for me to monitor, and it keeps me from, you know, getting liquidated, especially when I'm using leverage. Trades can do many different things. So if I'm being able to sit here and watch it and monitor it, I'm going to do a lot more different things. If I'm leaving for a while, I'm probably, one, not active on heavy trades. I'm not trading too heavy, or I have stop loss parameters. And here I probably see let's see how far I would let it go. That's just fair, you know, say, hey, yeah. So that's 5%, and that's not really something I'd like to see, but hey, if it did bust down, I see that line there. It looks like a decent little area it pounced out from. And if it breaks that, I try to go below the break point, not the point where it bounces from. So it could bounce from there, but that's 7%. So I would try to kiss just a little bit above that, and maybe make like 88.88 the stop loss for that trade. But again, it's just one of those things that if something does shift and change, then I'll be able to navigate that differently. But it's kind of the way I would approach that trade, just to make sure you get a pretty decent amount out of it. But once we actually hit that zone and I see some strength pumping out of that, maybe I'll add that other 30% around that zone, maybe to bolster that trade upwards, or maybe to recover it if I see it kind of slipping down a bit and it bouncing off that 9. But if it doesn't, then oops, you know, you lost 5%, and that sucks. But again, it wouldn't be too bad on what we're trading here. Let's see. And let's see, to further that, can't ignore the invalid line, which is here. Since it's a lower time frame, it kind of operates in those like smaller ranges too. Not like smaller ranges, but it's a little more tight. Let's see. 1040. Yeah. So that's pretty fun. And that kind of makes sense too. If it goes past that line, then I'll just erase all these and just call it a day, because there's always a new trade coming. This is a 15-minute time frame, so in this snapshot of time when this call was made, it looks like it was a good play. But, you know, things happen. If a new 15-minute call comes in here and it says maybe lower or higher, I might have to kind of recalibrate that a little bit, because the 15-minute and 1 hour, like I mentioned before, operate off of obviously the smaller time frame. So those snapshots of time could be different consistently and changes a lot quicker. The movement or some tighter micro range could change, whereas the 1 days, that macro range doesn't shift as quickly, and if it does, something big probably happened, and it's hard to predict that kind of stuff. Let's see. Yeah, just getting through that, kind of going through the trades and what I see, going through a bunch right now. Not too many really popping off. Oops, I need to switch back to the ledger. Oof, that's a fun one.
Hey, can I suggest?
Yeah.
So I've been waiting for Pyth, however you want to pronounce it. That 15-minute has something along the lines of your strat. How do you see or perceive these calls?
And damn, nice. So you talking about the 15 or the day? Sorry.
Nah, I'm waiting for the day too. Don't get me wrong, but but I want to know. It would be cool to see how you perceive the 15-minute.
Ooh, yeah, that's a good. Oof, good question. 1, 2, 3, 4, 5. Yeah, 1, 2, 3, 4, 5, 60, 80. So, yeah, let's see. And just to see. Okay, so good to obviously talk what looking at. I'm kind of seeing first the date that they were put out there. So obviously these look like they're all recent today. Let's see. 5, 5, 5, 2. So it sounds like a couple of these calls were batched out together in a single spurt, which would be this one, that one, and this 64. Then a couple hours later, Thor spat out and said, hey, 63. In my eyes, immediately, just instinctually, I would not tackle that top one. Is not something I'd be too concerned with. Plus, the range is really small. So it's like, it's not good, especially when you have under. So if I'm going a little heavier, I would probably start on this guy here, the 30, 63, 4, 63, 4. Let's see, it's 2200, 5, that's 2. I wouldn't ignore that guy either, but it's right next to this, a little higher. That's a good, yeah, I'd say that's a fun range there. He's at 5 o'clock, and then you have a 2 o'clock call. Not that really means too much, but since we're on 15-minute, so it kind of pays more attention because maybe something else changed. It didn't invalidate the earlier ones because we didn't pump past it. They're all kind of around that same invalidation zone, so they're not drastically different, but they might have shifted. Maybe things kind of shifted, so that's why also I think Sile and them made it so the calls disappear after a stop loss thing happens, because otherwise our board would be filled with calls that are maybe not as fresh and relevant. But let's see, so we got the 63, and I picked that one up there, and then I just comparing the lower ones. So theoretically if you buy that one, you could buy the 62 as well. I'm just going to draw that one, but 62, 8, yeah, it's fine. And this is a newer one. So yeah, how I see that and perceive it, 6008. Yeah. See that. And we don't want to ignore that because we should always acknowledge that 41. It's not going to fit on our chart. But it's good to say, hey, that's looming. Don't forget about it. But in reality, I doubt Pyth would take more. is that that's a good old 10% drop if you go down there. So that's, I mean, it's reasonable. But to go down to 41, it's kind of the risk management part here, as I'd be looking at.
What if we had a flash crash?
That flash crash, yeah. Well, just that's why it's not. I said that's a good idea. A good thing to bring up is, all right, if I did the trade that I did before and I put maybe 60%, sometimes I like to do that 60% of my capital in these 3 trades. Maybe you split 30% on each. So if I had $1,000 account, and then we wanted to get into 1, 2, 3, you would use, what was that? At least, what would I do? I probably would use that 600 up here, split amongst each other, 2, 4, 6. So you get that average, and you'll probably get that average right in that middle there at 62. Or you could forget the 62 and just do top and bottom and split it up there. But that could be fun just because of how that looks. Yeah, it looks fun. But anyways, so you got 600 there. Now you have about 30% left. I would, in that account, probably put a little bit down here. What would I do? Yeah, I would put some more down here just in case for the play. But if it did go that low, that's where I probably deploy leverage. And when I use that 60%, it's because sometimes if I'm up here in my, let's see, we're going to change this line. This would become your average entry on the yellow. And then 4, let's see. All right. What I would do then is I'd put another 600 in there. That would make my total account capital, like say 1,200. Now that would make my entry, let's see, it's 40. Let's go here. I don't like having a leverage higher than like 1.5 or 2 on average. If it's 2, then I'm really next to my computer going at it. Not really that crazy of a degen. Oh well, but let's see. If we go, so that's 33% draw. Let's say 15%. What I mean to get at here is that if I put 30% of my capital up here and I bought 1, 2, 3 with it up here, you get an average there. If you were to hit that zone down there, damn, I would probably go a little heavier here, which is 2 times or like an equal part to what was used up here. Yes, I'm employing a little leverage here, but if we drop 30%, I'll probably buy there. You'll probably get some sort of retrace, and you'll have to get, say, up to that 0.52 to start making your profits. And using this idea, right, I have to check it. Is it sound? If I do that and the worst case happens, I'll be about 0.52. The TPs on this would need to be looked at. It's saying TP1 is 0.57. So if it bounces back up, it's 57. Let's see. And then in that trade, even though it went down like 30%, the idea is, the notion is I could still get a 10% out of the trade. It might take a while, but if we did go through a big wick down and wick back up and I catch that bottom, I might even front run it a little bit because it's so, the range is so high. It sucks. I've missed these wick downs by pennies, and it sucks because then you're kind of counting on that for your recovery on the trade. But worst case too, that one day still has you at 62 or 67. So what I look at too is if it's a macro play, you're kind of doing the 15-minute there. We took, 5 trades, kind of got them down 3 that looked nice and kind of, segregated equally. And then you kind of also with that one day in the back of your mind. And that's when I say, hey, I'm using $1,000. It just makes it easy if, hey, that's all committed to this trade. I imagine that. So, hey, we might say goodbye to this 1,000 for a little bit in my cycle of trading, but it's regulated and committed. So I always imagine, if I lose everything, will you be upset? Yes, I'll be upset if I lost $1,000, but it's not the end of the world either, and it's highly unlikely. So I'll risk it. You know, it's a thing, because what would happen to fail that miserably? I'd have to go solo for Pyth. Something weird's happening in that regard. So
Yeah, and I'm sure Thor would
yeah,
at some point identify if that would have been the case. Otherwise, this play wouldn't have been an option for
exactly.
consideration.
Yeah, exactly.
Now, I mean, based on looking at how you go about these calls, it seems like you typically will DCA even, well, especially obviously on multiple calls, but for singles, uh, do you find yourself DCAing with that as well, or do you typically just go in? Um,
Yeah.
yeah.
Yeah. So that's where I go, go back and forth. If we have like the soul ones where, what was a good example?
And I only ask that part about the single calls in particular
Yeah.
because um I'm I'm getting over not getting in on, let's just say, price moves a few tenths of a percent below or above an entry. I would be so OCD about trying to capture that Pico top or bottom, but it really doesn't matter. Grand scheme of things.
Yeah.
Um,
It yeah, which depends on your ranges too. Like, I think that's a big thing. If I'm trying to do a trade that's not a wide range, like, I don't really trade Dogecoin, but it's just one example of a single call on a 4 hour. Oh shit. Oh, like a long. So they have some highs, but cool. I don't really care about that. It's a better example is those 4 hours and 1 days. I've had some interesting luck sometimes with the 4 hours or something, and it has gone south. But more often than not, if I stuck with it, sometimes the movement could be pretty coarse, and it could go down. And
oh yeah,
this chart goes down, but it's more often than not, I've recovered from it by just leaving it alone and coming back to it a little bit later. It helps that things are kind of in up mode, of course, right now. But even in that kind of bear market tones, it still was. We all hit the call, and maybe the whole group and chat's all going crazy, and we all, oh yeah, we're gonna go in on this one. I think a Rinder call did that, and a render, and then it went lower than normal. But if we kind of stuck with it, it just popped. It popped up eventually, which was nice. But to answer the question more, if I see a call with one, will I DCA in it? It really depends if the asset is worthy enough. But like we saw with this Dogecoin, it just went. If it were to go down, it was, I think I highlighted, it was like 19%. If you were to go from here down to there, it's 19%, and was it 14? Was that 14 is the thing? And especially nowadays, if everyone, the normies are spouting out about chasing the familiar coins they're looking for, or remember from a couple of years ago, this could definitely surge back up again, but who knows? But if you were to take the trade, what would I do? See if I was all about it. Yeah, it's actually a pretty recent one too. Could hit. It's 11%. It seems like this one would take a lot. Like the 4 hours and 1 day would take longer.
But
so it depends on how much I want to commit to the trade too. Kind of that conversation of like, oh, I'll commit $1,000 to the Pyth trade or this or 500 here. You can, I could do that if I were to, and I had I kind of separate my bags by a quick flip, super high, maybe a higher leverage one, that's going to be probably less cash or less capital being used for that compared to some of these other mid trades. If it's a long-term one, it's going to probably have a little bit more to play with, but what would I consider this as? Some assets I have to figure out which ones I really want to build my bag on, like ones that you buy and you throw in your ledger. Something like that for me is like been Jupe, that JLP, of course Bonk, getting that up, and Sol, BTC. Those are like big ones for me that I don't care. I'm buying it with some extra cash I won scalping something, so I'll take the scalps, and if I'm not buying Kira with it, I'm probably buying something else that I just recently, it's been the JLP, and just throwing that in the bag too. So it's, for me, if it's a trade like this, I'll definitely not put my whole bag into it. Let's use $1,000 example, I'd probably put maybe half, like 50% of what I wanted to go into here. If it goes south, you could buy DCA a bit more, or if it shows strength, you could go all about it. But what I mean to say is it's 4-hour call, so there will be other calls in between it. So I wouldn't commit all the capital to that, because as time moves on, there could be minor opportunities that present itself. And if I did see this and I put 500 here, and I saw maybe another call that popped up for the 1 hour a little higher than this, I would maybe start DCAing with that too. It's kind of fun to build the bag, almost, that's if you're doing spot. And something I think emotionally start happening when you get to see these calls and get your good buy in, and then I could start playing with the short calls too. So right now I don't hold Doge, but if I started to buy it at, like, I start nibbling in 100 or 200 on some of those 15-minute calls, and then keeping an eye on those shorts, I would just start going, hey, if I started buying a bag at like 14 or something, or even here, I just want to get exposure to the asset. I would do that, maybe buy here, for example, and then maybe have a sell point up here for the 1 hour short. That's a great range. But and at the same time, I would use that little capital, cool, but your average, if you were to do that big buy down here, is going to smack it down a bit too. So if you are bullish on it, yes, that's great to do. That's kind of how I'd approach that.
Or yeah, that answers it. What was I gonna say? Now, when it comes to, and this is because you seem like you enjoy trades with a lot of volatility. When it comes to 1-day calls, one day or even 4-hour calls, I don't know any right now off the top of my head that, well, aside from Piv, but let's just say it hits entry, and 4 hours later it reaches back up to the entry point, but before that it dropped, let's just say 10%, which is a nice cleave for profit, of course. But at that point, do you like to hold, or do you find yourself scalping?
So in that example, let's see. Okay. So
Like,
that,
just zip up, like, yeah.
If I were
You
to
get it.
drop, if I had my average buy here bouncing around, and then my buy was down about 10%, I'm like, oh damn. In that reality there too, honestly, at that point in that example, I wouldn't be too worried, because that looks like a good bounce zone anyways. What would I do is, if as time moves on, it's always contextual to the calls that then pop up later. So that's why sometimes, let's see, if that were to go south, I cross my fingers and hope a Thor call comes in too to guide the way a little bit, so I know, hey, I should buy here or there. But without even using TA, I hope you can kind of see that where things turned around for Pyth. And then you could see too, if I did lose 10%, boom, we'd be there. And I'm pretty sure we would get some kind of recovery bounce. And it's notice if you see some strength in that recovery bounce, then that's cool. But that's kind of veering away from Thor itself. If I'm just strictly using Thor, I probably just wait and see what the calls are saying. And to be more on it, if it dropped 10% and I still had, say, 30% capital to deploy, I probably would deploy some of it around this zone, which actually doesn't look too bad, in efforts to bring my top down. And so if I'm in a losing trade, I'll try to bring my entry price down a little bit with the DCA, maybe right there, where some people would put a stop loss, right through here. I don't know. I've been burned by those stop losses a lot. So unless it's a liquidation, I'm not really scared of it. You drop it down here and you buy there, lower that DCA in, and then you could try to make that break even. And maybe you don't want to exit the trade totally on the break even, but if I can get some kind of bounce and I see you're 0.05 in profit, like you're 0.5% in profit or something, cool, great. I'll take that dollar, de-risk myself like by 50% or 25%. And then if the trade continues down, I can buy more assets to do it. Again, this is going to be like marrying the trade a bit, and people tell you it's not the best thing to do, but if it's not your whole bag, I mean, you got time, and if you got patience for it, I think that you'll be able to get out of it. But when you use a lot of leverage that gets a little more difficult. But for me, leverage at some points like that, and used in the proper context, if there's a Thor call or I see a beautiful, like it's just, oof, that's a beautiful zone, I will deploy some leverage to lower that average to get that bounce out that I need to then strip away the leverage, and then have my bag continue. So sometimes if I'm 1.3 leveraged out because I needed a little bounce, I'm going to make sure to sell that leverage a bit higher, so I almost am DCAing out of a trade too. And maybe that's when Pyth has a bunch of short calls popping up at 61, okay, cool, or 59 if I'm going down there. So if I see that short call, I wish somewhere else, but if you see that short call popping up, I might use that as a breakaway. I'll use that as a chance for me to get out of there, and make that my new goal. So my charts will adjust if a new call pops up on Thor. It kind of guides me through it. It's hard to show it when we're in a stationary position like this, but yeah, through time you'll see Thor pop up with some little shorts or something, and that for me, if I see these shorts, it's a really good way for me to break out if I needed to.
Appreciate that.
Yeah, it doesn't, and it's all really circumstantial. That's
of
why.
course.
That's why I think before I enter the trade, I'm really like this AVAX one. Like there's even that ARB had something higher. A bit ago, ARB was really good because it had some other calls that were pushing it up, but they went away. This one here though is like the 53, and also if you're in the other DGen chat and Sile's getting excited over something, then that also plays a little bit into it. For me at least, like, okay, we like this, huh? All right,
yeah,
so
for sure.
I'm like, okay, I'll hang out. This is a good one. Optimism too. You could see how things kind of like to get near it. I don't always just bank on it hitting there, but I'll see if it's a 10% gap between here and the short. and there's a long call below it, I might. This is a bad one to show, the optimism one, but if it was 5.44 and that was the goal, and then there was a long sitting at 4.4 or something, I would get that. But if its TPs were only like 4.7, I might unload some of my bag at like that's a bad one, but sorry, that example wouldn't work for those numbers, but 1.99, and I'm gonna buy back a little above it. But if there was a short there and we were closer to this entry, I would be way more bullish on the TPs of the 5.4 than the TPs that I see here. So sometimes I'll lose my bag at like 3.44, like half of it, while still being bullish on that and building a position up. Again, it depends on if you're using a perpetual markets where you're getting fees on everything you're holding. So those long-term holds get annoying there. But spot, of course, when you other markets, you don't have to pay a rental fee for the asset. But
not your keys, not your crypto.
Yeah. Yeah. Let's see. And that's a bunch of it. And there's a lot you could do, and that's why I like painting the charts and just like start entering. If you sit down with Thor, you just put in a number. You put in that invalid line is the one that I always like to put up too, and then you could kind of see the ranges. And I use RSI. That's a good one, but I like seeing the volume and RSI, even the MACD. But my TA usage has gone through the floor ever since Thor came out, because it's honestly, when you start putting those lines up, it's pretty much the lines that I'd be getting after doing the TA itself. Before I would do it, and then Thor would match up with it, and I just stopped doing it because Thor was already doing it.
Yeah, best indicator, yeah.
And then I think, I guess time flies, but I will shout out some stocks too to switch it up a little bit here. Let's see. Oh yeah, boring. It's boomer o'clock here.
Yo, these are great, Dregz. Thanks a lot for doing this. It's a bit of a different speed and different take than what Mode does, so it's great to have something like this.
Oh, thanks. Yeah, and I'm glad it's resonating, because I'm not the biggest technical analysis guy, but definitely love charts and patterns. So once you can look at a chart, you'll be able to. You look at them enough, you'll see a pattern, and then like sometimes you see a cup or a couple shoulders going on, and then you see a Thor box there, and look at that. This is why I wanted to bring up the stock thing. So we're in a Tesla, and I had a trade before that hit the zone, and I emptied out a bit around that 200. Yeah, it came right down here at like the 177, right where it is now, and I dropped a little. I was going for the 220, 225 it had as a TP, but I just didn't sell it all. So now I'm kind of back to my entry now where I was with that call. But hey, it's great to see that there's another one popping up. And everyone says stocks is boring, low movements, but hey, if you can catch this one on the TP1, you just did a 21% trade in the stock market. And say you did your whole account there, you do this one trade and complete it, you've beat the market, you are an ace trader. Like, you could call it a year, and boom, I don't know, it's just pretty nutty when you see trades like that. So how I kind of look for stocks, I mean, obviously you got the big market cap ones, but even on say TradingView, what is
Wait, sorry to interrupt.
Oh, you're good.
Question about stocks. Do you find then, are you alluding to the fact or idea that with stocks, the percentage swings are higher because the market caps are larger?
Not exactly. You'll find
okay,
like biotech or some some penny stocks and stuff. They're gonna be reminding you of crypto, just a lot of rugs. They still exist in this kind of market too, but I like. Yeah, when I go and scan for stocks, because they're not provided for you, you have to kind of look them up and pay for that signal. I'm sure it gets a little difficult finding a call like this. This is pretty cool. So I did look up some beforehand just to get a little rundown. But when I go to say markets, let's go to, I guess it's here. Sorry, I'll just start over.
Okay, and this is where you look for actual.
This is where I get my my tickers. So I go here, you go to, what is it? Trading View, and I hit markets, stocks. And then you have like large cap, high dividend, top gainers, top losers, things that have moved a lot. Sometimes I like top losers, and I scan a bunch of random ones to see if we're close to an entry zone for a long, because I'm not really shorting stuff in this market and stocks, so I'm just long, like buying and selling. So most active is fun too. Usually it's just stuff that has high volume, and I want stuff with a lot of volume, because I feel like those are more, I don't want to say predictive, but they're just a little better for when I use Thor. It seems to be more, I don't know, the hit rate works pretty nice for me in my experience. But so I'll sit here, I pop it up, and I go kind of down the list. I go Nvidia, Tesla, AMD, Apple, and I do see something like this, like SMCI is really cool, especially in the AI sector right now, but it's a little high. I'm not really trying to buy 1,159 per buy. It's a little higher, but I could get that same percentage movement, buying a lesser cost item. Anyways, so you go down this list, and I put in a couple. So the Palantir, you'll find stuff that doesn't have any calls loaded. It's what happens, it kind of sucks sometimes. You get a bunch of nothing. Nvidia, nothing. Google, you don't get anything with Google. Coin's pretty cool. I think I saw, one through here. So Coinbase, Thor's saying, was it 39? So, all right, what are we doing? We'll go to, let's pull up Coinbase. And then, these markets closed. So it looks like post-market, they, it went above this invalidation line thing. So it could be dancing here, but I'd still put 100 and that's a big drop. Damn. So it's always good to with stock market, things move a little slower, but this could be invalidated, that buy zone there. But I mean, if it did hit, that'd be a crazy dip for sure. But it looks like it just got invalidated. 40% drop. That'd be nutty. But it looks like it got validated, so I'm not too concerned with that. I mean, realistically, I'd wait for a new call. And these, sometimes when you're looking at stocks, they take a second to populate. That's why I pulled these up a little earlier. When you call into Thor to ask for a stock, it might not be pulling the data since someone else had a request. So if you looked up, what is this, Amazon, you could be sitting with an old call that's already invalidated or already played out, and thinking that it's a relevant call right now. You have to give it 10 to 15 minutes to kind of refresh, and then hard refresh the page a little bit sometimes, is what I noticed, to get the true list. So here you got Amazon too. What is this? You go down here, it's if it hits 160, it goes to 65. That seems reasonable, and that's something that I'd probably trade. I wouldn't buy this just because they're so close. When you asked before about the multiple calls, my plays in stock market are a little different. I wouldn't DCA into
less
this
risky.
One. Yeah, I'm way less risky, so I'm probably having a little more of the stop action and stuff. Or the movements too are, I want to say, controlled, but it's a little more organized sometimes and how you can see some of these movements. Like obviously it's going to try and fill this gap that just jumped up through here, so that's reasonable for it to kind of need a recovery. But and for me it's a good hit, and I definitely do the lower one, or maybe I would span it out and maybe do like if I wanted to do a certain amount of buys, I decide again my way I trade, how much do I want to commit to this trade, and then I'd probably put 25% of that amount up on this one to be exposed to that movement. But you know, there's a chance it goes down here, and I'd rather catch that lower one in the stock market, so I'd probably just do the 75% weight on that one down there. Then you just kind of, if I can make a couple percents off of it, then that's a good day. I just try to do those ones quickly, like a least risky 3 and 5%, even 10%. You know, I could take what I could get. I just try to do a lot of those, so I try to churn out a bunch of 2 to 5% trades. Usually the ranges are pretty nice, and it's just a little quick bounce. But yeah, let's see Apple.
Word, yeah, and never. I haven't dabbled into stocks yet, but they seem fun for sure.
Yeah, no, it's a lot more fun with Thor. You would hate it without it. No,
I know.
I wouldn't. I'd even
trust me, bro.
Yeah, oh, I trust that. Yeah, because for me, man, that's I just took a break from it until we got Thor with stocks. That's when I reloaded the account. But even here, this is not as nice. Yeah, they got that little boxes. Sometimes they're small, but that makes sense too. Apple, like it goes down to 145 and retraces to where it's hanging out right now. That seems like a decent move. And probably throw a couple there as well. How would I approach that? You know, just I usually put, you know, that 2%. I try to keep the 2% stop loss on these ones too, which is a little different. Like I do have a bit more of a stop loss because I'm not constantly on my stock portfolio as much, so I like to be a little more automated when I'm doing stocks. But yeah, no, it's something that I think it's slept on a lot, just because again the movements, I don't want to say they're always controlled movements, but you know, we all know that someone else's market making.
Nah, dude, with the stocks, man.
So, yeah, dude, dude, it's there, and man, it's clear as day. Now you could get pretty heady with this and get into options, but that would be for another day. I haven't really delved into options because I've been really successful.
And options is like perpetuals for stocks.
It's just really quickly, I guess it's the right to buy something, and the whole market of options is trading the premium. So it basically, you don't have to do the buy. You're buying the right to buy or selling the right to buy 100 shares. So you let it expire or execute it. That you don't concern yourself with that personally. You're just trading premiums for the kind of the whales in the market. And so that's when you have to look into theta decay and a lot of other things. It's just a whole nother ball game.
You're speaking a different language
exactly.
for me right now.
Yeah. It gets too much, and honestly, I don't know. Some people are really good at it, but if you're doing these stock calls, I was like, ooh, I could get into options again, but dude, if you're making 10% on 20% on these stock moves,
why bother, right?
Yeah, you're not gonna be really risking it. It's pretty much gambling for me at some point at the options.
Hey, what's going on, guys? I would suggest like paper trading if you're gonna try options for like 6 months to a year.
Damn right.
Because you can get wrecked on options. What he's talking about, theta decay. If there's volatility, it creates a premium on the option. So if things get less volatile, but the price is going up, your option could be going down. So the price is going in your direction, and you're still getting wrecked.
Yep. It's not fun. I've had great times and just as many bad times. So
would not recommend. That's like the last thing.
It's the last.
I know a guy that trades. Yeah, I know a guy.
When was that made? Like in prehistoric times?
I don't know. It was. I don't know when it was created, but it was created to get more money.
It just doesn't. Yeah, it doesn't seem like a plausible way to trade.
Nah.
If there's that much, it's beyond crypto risk, bro. It's beyond meme coin risk.
This is when you get
like when they're having options expire and stuff. That's when we get that crazy price action in the market because they're trying to crush those people that have options expiring. The only one I'd kind of recommend would be like a leap. A leap's like a long-term option. That's like if you're like, well, I think between now and next year the stock's going to go up or down. That's like, I don't know. That's as much as I mess with options because I've been wrecked on options before.
You said like, why would you do options too? It's stuff like this. You get pretty heady when you get into spreads. You can basically borrow options at a lower amount. And then you could have like put and calls. You're able to get a nice little range there too. So what people do is they'll play against the premiums and theta decay burn. So basically you'll be in the money in a certain range if the price is in a certain range because something else is doing that. But like, dude, this gets really get the iron condor.
So it's basically a whale game.
Exactly, like buy to open a 90 put, sell to open 94. And
no small fish are really doing much.
No. And
well, they are. They're called like this is Wall Street bets territory.
Yes.
This is what they'll buy dailies. So it's expiring that day, and if it hits, you make big money. If it doesn't, it's worthless. You lose all your money.
Yeah.
If you're out of the money, you literally lose everything.
Yep, and it expires worthless. So it's Again, if I'd much rather just stick to the calls, and just hit those entries, man, because that's pretty cool. I've tried it a bit, and it's just too much. Not unless you're an ace at it.
No,
some people
thanks for the clarity though.
Yeah, so you're not missing much. Like anything.
Nah, I see that now.
Yeah.
Trust.
That's pretty cool there. So the stocks are really fun. I always just like to shout them out, and like if you are into it, the Tesla would be the big shout out there of the day. Looks like it's hitting that zone to buy again. So I like using
and
my.
What percent is that?
What percent? Yeah. So. Price range.
Shit, if you wish I had a stock account.
Right? You buy it now and
hell yeah.
Sell it at 223 or let's just do TP1. So let's see. Yeah, so it's like 20% gain at TP1, which I would think that's the highest likely one to hit. The 20 didn't work for me last time, the 225, but it could this time if it's retesting this zone and coming up. But if you just rocket it up to, let's say, 220, you'll get like 25% gains on that, which is cool.
And you'd be a stock market fucking genius.
Yeah, exactly. You like, I mean, you do, like if I did your whole account on that, you made 24% on your account, there'd be... You call it a year, because on their terms at least. But that just could be 1 week for you, which is freaking crazy. And unless you guys have any other more questions, I'd probably just touch on that little LP pool thing real quick. But if anyone has little questions on that, but. Nice. Well, I'll just shout out the pools that go on for Kira.
When's Kira hitting $1? Tell me.
Damn, man. I don't know. Maybe we should delete these. If we delete these pools, maybe we could get some of that. But I think sometimes, I don't know if anyone's in here that was asking, but kind of like how it works is just a quick rundown if you don't know. You put $100 in, you get the post up 5,433 Kira. And then you go check 5433 Kira is about $100, on what's going on there. So you're matching the assets or the weight of the pool and which direction it is right now. For me, I mean, this is the cool part is if you look at Kira, this is like the best beginner LP pool action. We have stayed in this range for a damn year or more. Was it
every time we get any kind of pump, they just sell into it.
Yeah.
It's like, oh.
No, it's okay, but like for me, I was like going damn, and you know, you at some point want to trade it too because it just pops up, but you can't sell because the slippage is too much. So kind of sucks sometimes for me. Yeah, I've been chilling. I think I started the pool within like kind of like the 17 or the 0.017.
So it's just ranging in your pool?
Yeah, we've just been ranging. But the pool, this pool is doesn't have a top, so it basically it's full range. I don't really hyper liquid. I could probably just hyper leverage this zone, but I don't care. If it goes past it, it's gonna suck for me because I don't want to lose all my Kira. I want it to slowly maybe average out. In my worst case, I love Kira and I want more of it. I'm not trying to sell it, but let's understand that if it goes 5x,
so if it pumps to if it pumps to 20 cents, you lose all your Kira?
You probably have a lower amount of Kira, but not all of it. It's a full range, so you start diminishing it. But that's saying that Kira would go up to 20 cents immediately and never come back down. But you even said it before. Anytime this goes up, I literally said that anytime this goes up, someone sells it right back down. And then they buy it up and it sells it down, and it kind of repeats until, well, that announcement hype died away, and then we got through here. And then, you know, it looks like we're getting a little bit more life into Kira. Ooh, yeah, and it must be the anticipation for something soon. I don't know. Trust me, bro, I guess. Just trusting them bros.
Someone's selling it.
Yeah, someone's selling it right now. What the fuck? But yeah, anyways, it goes up and
track
down.
That fucker's wallet.
gonna find out right now.
Probably a Yakuza.
Yeah. So yeah, no, for me that was cool because when they do that, the people, and I think Sal said in the one in the chat too, is like, yeah, 4% fee is pretty crazy, but we have that and the Orca pool too is a 1%. The 1% gets a lot more traffic, or lots more takes more of the volume. Let's see if it loads up. Come on. Well, yeah, anyways, it's like 1%. It gets more of the volume. Actually, I could just see this here because in the safety zone, yeah. So you can see that 4K volume was done by the Cure pool here for 1%. This is probably that 4%. So what's cool is that 4% pool, because people who are selling, they don't really care. They just want out. So we're rocking this 4% pool because they're just dumping on you. So basically for the 536, it's not much volume, but it still was able to snatch $21 off of that for the day, reintegrate it within this, and then when you're reading this virtual price on Meteora, it looks like this pool is up 1.12. You just look at that as saying this pool is up 12%, which would be about, if it's 3,000, it'd be, what is that, like $370 plus almost like $400 this pool is generated and re-entered into itself. Now it could be the assets of Kira, so that could be $21, it could be $10 in Kira and $10 there. But the ultimate alpha here is if my account was down by like $30 but up 12,000 Kira, that means I got that Kira at about 0.002 average. So even if you're getting dumped on in the pools, Kira is one of the few assets that I feel like we're at the bottom. we are like at that bottom zone. So I'm not too afraid of that range bound action there. There's just little thing that I know some people don't know, and I don't like liquidity pools at all, but I figure if your Kira is just sitting there, it could be fun to just experiment with that a little bit too. And in this regard, making Kira, Kira's kind of making you a little bit more. If it shoots up again, I might at some point remove it. Oh shit, like, oh, the Kira, most of that Kira bag's getting sold, but it's okay. I usually trade and I buy more Kira, so yeah, I'm not too worried.
Which pool was that in specific?
Oh, great, it loaded. So this is the Kira USD. This is from Orca. And it's saying like in the 24 hours, this pool has made nearly 1% for the people inside that pool, which, I mean, you know, every day you're making 1% or something like that. It's not that crazy compared to, you know, the degen stuff, but hey, there's the lowest risk pool I have with the kind of the most I'm making from it, I guess. And that's that one. And then on Meteora, you have just the regular pools. You just type in Kira. You'll see some people made some other ones too, but they're not, you know, they're low. And when you're low, you have to watch out. Like this one, if you're under, see this, if you're under $600, you have to deposit at least $600. You might lose to some arbitrage action. The arbitrage action is what you might see happening even here, but I'm not too worried about these ones here. But it's when you go into like little trading view and you see someone buying something for 99 cents and flipping it for 2 cents. And what you'll notice here is they're using these little pools that people have forgotten about. They forgot their, you know, 69.69 Kira and 5K, 6K Kira in there. But it's slowly, I wouldn't say slowly getting drained, but they're slowly kind of getting not the best price for what's going on. And so that's getting arbitraged out. So that's what I would be careful of if you're trying to get in a pool that's low. And these are relatively low to this crypto world. But hey, the 3K ones kind of stacked up. And then you look through here, you can see the 365-day yield. I always like to see like by the day. So if I do like 278 divided by 365. So that pool, I just divided. I wish it's like the day. So I was like seeing what it gets you in a day. But the pool will still get you about, you know, close to a single %, which is nice. Just little things like that are cool, but you have to be like, when you put something in like that, you have to acknowledge that you might be getting a lot more Kira, or you might be getting a lot more USD and losing that Kira. But the big thing is, you know, it goes back and forth and through time. So I've been in some pools since like December. Through time, at least the Orca, your average, because it goes up. I even held when it was like the 0.05, and you know, we selling couple Ks, 10, 20, 30 Ks of Kira, but it came back down inevitably. And that's just kind of the way these coins work sometimes, unless they do a crazy burn. Burn another 3 billion of these coins, then I might recalibrate. But
but you were positioned in that 3K Kira one on Meteora.
Yeah, no, I'm in that 3K Kira one. What is that? Yeah, the 4%. Yeah, it's the 4% charge one. Yeah. So you get a little less volume, but when you do get the volume, it's hitting nicely because it's saying the slippage is so far that your 4% fee is better than the slippage on some other stuff. So they're going to take it because they just want to dump or just sweeping or something. So little things like that. Or you know, we can just take away all the liquidity pools so it can just shoot up and moon without people having those sell walls and stuff from the pools themselves.
Yeah.
Just like a little beginning one. I think Kira is a really fun way to expose yourself to some pools and just see how they work. If you ever do, some pro tips are like, if I enter a pool and it's like, okay, I want 100, you know, doing the $100 thing. It's always good to snapshot this, or your wallet's going to get that authorization thing and you're going to accept that transaction. I screenshot it or write it down in your notes somewhere of how much you entered with. A lot of times these protocols don't give you your profit and loss, so you're just staring at a pool that you've mixed your money into and you don't know if you're up or down. Or the best case you have to look at it is that you're getting a really good average for the Kira. For this example, you could be getting 10K Kira for $20 through time. That's pretty cool, especially when you're bullish on Kira. But I made the mistake of not being able to monitor all that and see. But yeah, No, that was a little quick 101.
Dude, I just checked. I just checked my Jupe pool that I had entered in on Meter. I put basically my allocation into just the pool, and I completely forgot about it for a couple weeks. But right now it says, for instance, like there's more USDC than in my current balance than the current than the juke. So is that like to be concerned about?
I wouldn't say if it's just a normal pool and like a jupe. You said the jupe is lower than you started with.
Well, the jupe is lower, but the USDC has compensated.
Yeah, so you're posting up assets for people to trade. So the price from when you entered has gone up. So jupe has gone up in value. So people have purchased your Jupiter.
Okay.
And then the biggest thing too is everyone gets excited about that, but then it's cool, but you're just getting the fees from it. So again, this ends up being kind of a whales game. When in that, so that's why we could play the Kira thing until like some whale action happens, and then they're gonna get all the fees, right? Because they're hosting most of the capital. But right now, there's not much capital in Kira, so when you're doing that, you're able to get a bit more of that pie relative to there's a $46 million or like $5 million pool. But I just popped up the DLMM cycle thing real quick just to. I wouldn't do the jupe soul, but it's just a good example of say, I'm just gonna put one soul and match it here. So when you said I want to do see what's going on, it's easier to visualize. These kind of compress the DLM pools, compress your liquidity and focus it on a certain range from top to bottom. Each bin is a different set of numbers and how many bins and steps there are. I usually just see which one's going. I don't really use these much unless there's like an event going on or a coin launch or something. I did it with Jupe coin launch because just so much people selling and buying. You're able to get a lot more with it. But with this one, I thought it was cool because if you wanted to DCA out of something in a way and collect fees for it, what I like to do is sometimes just doing a one-sided pool, and sometimes you don't think you can do a one-sided pool, but you totally can. So if I did this, if the price goes up, I'm only selling my Jupe, but if it goes back down, I'm rebuying it. And then conversely, if I had one soul, I put one soul in there as a means to maybe buy Jupe. You know, you're not making much off that one soul for fees, but maybe it's a fun way for you to dollar cost average on your way down. So you're spending here at this zone 0.01 soul to get some Jupiter at this price, like, you know, above it. It's a different way and a little more advanced strategy, but sometimes if I don't want to risk an asset like Jupiter, I don't want to risk it. I don't want to risk my sweet Jupe. I'm just gonna insert soul so it buys it on the downside, so at least I'm making money sub levels, or worst case if it drops lower, you could see that my lowest buy is at 50, around 58.6, so that's really nice. And that's pretty much where I'd be buying is that this is with Jupe and soul, not USDC, but you kind of get the idea of you don't need to put both assets in. You could just put one in and play off the other side, which I think is really cool too, and it's way more focused than just a liquidity pool. So what I mean to say too is that's less of a whales game. That's more of a game where you could play a tight range, and that's where maybe sometimes I'll incorporate a Thor call. If Thor's calling for it's not right now, but if it was Jupe at 59 cents, then maybe I'll set up the pool like that, just one-sided to catch that center zone, and then I'll just maybe it dances back and forth between that pool, and you just have a good time just collecting those fees, while the worst case being you've bought Jupiter that you were going to buy anyways. So it's buying DCAing with fees included. That's just another little degen.
Oh, okay, I see what you mean.
Yeah, just something you can look at and explore too. But I always thought you had to double side it. But when I learned you could single side it, it takes away my risk of the losing Jupiter, for example. Like if it shoots up and moons, well, I'll miss out on that because I sold it all.
Word.
Yeah, sweet. Yeah, unless there's any other questions, I think we peaked out on this session.
Yeah, man, it was dope.
Hell yeah.
I appreciate you, Dregz. It was awesome.
Appreciate you guys. Hopefully that answers.
Definitely learned a lot, dude.
Oh, good. Yeah, just
thank you.
A lot of me rambling, so I'm glad you guys were able to get something out of it.
Well, I actually speak ramble, so you're good.
Oh, this is perfect. Hell yeah.
Frogs fuck.
Oh, yeah.
All right, y'all.
Yeah, we're right on. Yeah, well, I guess we're going to call it a day.
Frogs fuck.
Frogs, indeed, and totally fuck. Let's
Wait.
go.
Let me
Motherfucking Thor.
Whoa.
Dregz,
Yes.
Frogs fuck.
your speculation on TMB.
Oh, my speculation, Team B. Oh, man, my speculation. I don't know anything. They don't tell me shit. So this is just a guess. I think it might be something. I sure hope it's something to do with their. Was it the DYM, whatever that thing that they're doing on Ethereum layer 2 or something. Maybe we get to be exposed to some of that trading. I would like to see something like that happen. Maybe using the funds as some kind of base principal trade. But that could be that. Could be some, sounds like, I mean, we all know maybe some new art's coming. I don't know.
Hell yeah!
I don't know.
The new web page waiting for it.
Yeah.
Tomorrow's supposed to be the announcement.
Yeah, and man, but they're saying everything we're saying, and we've brought this up. I think even what I just said, we brought it up, but we're nowhere close. So my guess is as good as yours.
Trust me, bro.
Hey man, let's see what tomorrow brings.
Hell yeah, we'll be there. Well, thanks again for coming
Trust
by,
me, bro.
guys. See you next
Peace.
Thursday.
See you, boys.
Chill.